Welcome to ISE's Equity Index Weekly Outlook, a weekly outlook on ISE and other industry indexes, hosted by Patrick Seresna, a derivative market specialist and investment manager with extensive expertise in options and the broader derivative markets. ISE trades options on more than 15 proprietary sector indexes, as well as broad-based indexes and a variety of licensed benchmarks. ISE continually enhances its trading systems and develops new index options products to provide investors with the best marketplace and investment tools to trade smarter.
Hello and welcome to the ISE Equity Index Outlook for April 18th, 2011. This is Patrick Seresna. As always, we start off with a chart of the S&P 500 using that SPDR exchange traded fund symbol SPY. We were hitting that overhead resistance around that 34-35 level on the upside, and we were looking for the market to potentially first take a little step back before advancing. At this juncture, the scenario has been playing out pretty accurately. We again are looking for the highs of the year to come in somewhere in that blue box zone. So either whether they've already been put in with the tests up in that area, or whether there's still one more leg higher coming here in the upcoming weeks as the market advances towards the 136 to even 138 level on the upside. Nonetheless, in the bigger picture, we're not very bullish on this market, and there's certainly a risk at some point for the market to begin a much bigger corrective phase. But for the short term, we still have to consider the window open for this market to still advance one more step higher. If for whatever reason we came out this week with any significant drop below the 130 level, particularly if it headed all the way down towards the 126 to 127 level, we would immediately start considering the possibility that we saw a double top on the S&P 500 and that that bigger picture corrective pattern has already begun. But at this stage, there's not enough evidence to conclude that, and therefore we're still considering all the possibilities of advancing up towards, again, that blue box in the 135 to 138 area. Next year, I want to take a look at the ISE US Regional Banks Index, which is symbol JLO. Regional banks started to strengthen the previous week and looked like it could actually roll up for a push to the previous highs. But as earnings started coming out, the financials started to weaken on many of the announcements. And so we're now finding ourselves retesting an important support line around this 24.50-25. If the regional banks here break this support line, it opens the window for consolidation down to 23 or even 22. And would certainly close the window on the regional banks as showing any leadership if there was one more leg higher in the markets. Next year, I want to take a look at the ISE Syndex, which is symbol SIN. This is an index of all the casino, tobacco, and distiller companies. We had a beautiful retest of that 134 to 136 zone on the upside, and now a little pullback that is attempting to break out again. At this juncture, the Syndex may very well attempt to break to a higher high and gun for even 140, 142 on the upside, but I wouldn't be targeting those upside targets until after we clear the 134, 136 area. It is a pretty formidable overhead resistance, and we're just a few dollars away from it. Making a commitment down here, anticipating that breakout, represents a poor risk reward proposition. You want to wait until there's some sort of evidence that the Syndex has actually broken out. Next year, I want to take a look at the ISE Home Builders Index, which is symbol RUF, and we more or less had home builders continue to deteriorate, and there's no sign of them turning around. We've been waiting for some sort of a break of this trend line to indicate that it may want to go higher, but now that we've broken below the 940, 950 area on the downside, there's room for this to continue to erode all the way down to its previous lows. So initially, you could target in that 880 to 9 area, but even that 860 area was where the lows in November came in. One way or another, the home builders do not look very healthy at the moment. Next year, I want to take a look at the ISE Natural Gas Index, which is symbol FUM, and we more or less had the natural gas index test that 143, 145 blue box, which was our measured target on the upside, and a very dramatic reversal. Whether commodities continue to actually have one more leg higher, it is becoming more and more likely that natural gas either has already seen a high or is going to be making a topping formation up along here by retesting those zones in some form or another. Whether this this was exactly the market top reversal is not clear yet, but we're skeptical about the further sustainability of any new rallies that can emerge here. Finally, I want to take a look at the ISE Mini FTSE 100 Index, which is a symbol UKX. Here we have the FTSE more or less consolidating right below its previous highs up along those testing zones. If the S&P 500 and a number of other global indices are able to break to new highs, then the FTSE may very well roll up and even attempt a quick move up to 620 or even 630. But that would be only in conjunction with a lot of the other global marketplaces. If the S&P 500 has seen a double top, then the FTSE will also have seen a double top along here. So the global correlation is going to be there at this stage. We're watching to see how this consolidation goes. Again, if that S&P breaks out, look for a move on the FTSE up towards even 620, 630, but watch for bigger picture topping formations up along here. That was your ISE Equity Index Outlook. Thank you for joining me.
Thank you for participating in this week's session. Please join us again next week. For more information about Patrick Ceresna and to sign up for free index options trade alerts, visit www.optionsource.net. To learn more about ISE index options, visit us at www.ise.com/indexoptions.